All right, welcome. Welcome to a refresher webinar. Now, these refresher webinars we normally do for our members, but I decided to do a completely full-fledged webinar here with a presentation on how to actually add positions to winning trades. This will be a run-through of how to identify candles, how to read candles, when candles make high highs, higher lows, lower highs. This webinar is going to be for about 2 to 3 hours. Please don't ask any questions. Please keep the questions to yourself at the end of the webinar. We will try our best to answer all the questions as we go along without you even asking them. After this webinar is done, we will do a simulation session. It's your choice. You want to stay for the simulation or not, but it's going to be recorded anyway. What's going to happen is after that, maybe by tomorrow morning, everyone will receive the link to the copy of the webinar so that you can watch it as many times as you want. All right? Perfect. So let's get this started. Please disable chat. Okay, how do you disable chat? Participants can chat with no one. There we go. Fixed it. Now no one can talk to anyone. Awesome. So perfectly. So the topics that we will cover today, these are advanced concepts. For some people, they may be very, very simple because you already know them, which is very good. So we're going to go over how to identify an uptrend, how to identify a downtrend, because when you're, let's say, taking buy positions, right? When you're taking buy positions, you are essentially buying into a trend, right? So at the same time, let's say if you take a buy and then once you can clearly identify how candles are making higher highs and higher lows, you can essentially add positions to that trade as well. Same thing goes for downtrend. Next, we're going to talk about how to identify consolidation in uptrends, how to identify consolidation in downtrends, how to be safe from consolidations, right? I mean, last 2 weeks of June were horrible. We had horrible weeks. I know a lot of people got stuck in the June consolidation there, and you got pretty devastating results. So what we're going to do is we're going to talk about those as well. And then we're going to have some practical examples. These practical examples are going to be like, chart examples on certain things that work and certain things that don't work. And then at the end, we're going to do a bonus simulation session for everybody. So let's start. When to add more positions, right? Now, whenever you're taking a trade, you always think, okay, what if I had more positions in this trade? So what we're going to do is now, whenever the market is making higher highs or higher lows, that's when you want to add buying positions. So basically what this means is that when price is moving bullish, it's creating a high, it's coming down, creating a higher low, and then it's making a higher high, higher low, and then a higher high, right? So this is basically a very, very basic scenario of an uptrend. So now, when you want to talk about this in terms of candles, now if you want to see, okay, well, we have a basic trend here, which is heading up, obviously. So what will it look like when candles are forming? So basically what that's going to work is you will have a candle which is going to form like this, and then you will have next candle which is formed like this. But then when the next candle is forming, it's going to have wick that may go down all the way over there, or it may have a wick that may even be like this. So for simplicity, we're going to keep it just like over here, right? And then it's going to have another wick up over here. Then you might have another candle with a wick like this, and another wick like this, and then you might have another candle with no wick at the top, but a wick at the bottom, right? So when you're looking at the candles like this, a lot of people get confused as to where's the high and where's the low, So basically, this is a candle you have. This is the high of the candle. This is the low of the candle, right? This is the low of the next candle. This is the high of the next candle. So now if you notice that this candle is making a higher low than the previous candle, right? And this candle is making a higher high than the previous candle. And now once you're watching this happen, you're thinking that, okay, if price is heading bullish, right? If price is heading bullish, it should continue making higher highs and higher lows. It should continue making higher highs and higher lows. So now you're putting your trust into the system. Now you're putting your trust that, okay, if price is really trending bullish, the next candle needs to respect the previous low and then continue moving up, right? Like a lot of times guys say, oh, you know what, we don't have any confirmations, like we don't know, we want some confirmation, we want some sign from above to tell us price is going to go up. The fact of the matter is there will be no sign from above. You will never get a sign from above that, okay, let's say, for example, okay, Roy, right now you can take a buy. This is the buy you want to take right now. No, you're taking buys based on what you already know, right? So let's say, for example, in the opposite side of the spectrum, let's say if we talk about whenever price is making lower lows and lower highs and downtrend, so that what that's going to look like is that you will have a candle which is moving like this. Uh-oh, we have a problem child over here. Disable participant notifications. All right, disable this. Okay, good, perfect. All right, awesome. So let's say you have a candle forming bearish, right? And let's say you have a resistance up over here. And now you're anticipating the next candle to respect the high of the previous one, which is going to be right over here. And then you're trying to take a sell. And that sell, you're basically putting your trust in the next candle to continue moving down. Right now, you may ask, oh, is this valid on the 5-minute time frame, or is this valid on the 15-minute time frame? The thing is, when you're looking at these situations to, like, maybe if you're waiting for these candles to print, you're going to get really, really strong confirmations on the 30-minute time frame. 30-minute time frame, 1-hour time frame, 15-minute time frame, the confirmations might not be that good because, let's say if this is a 15-minute time frame, you might see a candle moving up like this, but a candle moving up like this, let's say that this is the start of the 30-minute candle and this is the end of the 30-minute candle, provided this is the 15-minute time frame. So now maybe if this candle is closing bullish, the 30-minute candle may be closing a bearish candle with a long wick, right? So now you're anticipating for the next candle to continue moving down as well. So let's go on to our next slide here and let's talk more about uptrends and what you're basically looking at during uptrends. So this was, I think, enough of the basics here. Let's go to the next one. All right. When is price most likely to trend? Because, sometimes, when you're trading the New York Open and then you're done trading New York Open, then you move to London close. And after London close, you move on to the afternoon session, right? And in the afternoon session, price may not have a lot of volume. So whenever you're looking for trends will only happen when there's high volume in the market. You have to understand this. In the afternoon time at like 12 p.m. Eastern, 1 p.m. Eastern, 2, 3, 4, 5 p.m. Eastern, there's no volume, right? There's no volume, there's no trend at that time. Sometimes, with underlying fundamental news, there may be some sort of trend, but for the most part, there's no trend. Same thing with the Asian session. So if you look at the Asian, there will be even like a smaller trend in the Asian session because not many markets are open at that time. There's less volume. So what we're going to look at is we're going to look at different times when there's volume in the market. So first you have pre-Asian, right? Because knowing the times when there's going to be volume in the market is going to be really important when you are looking for trends to trade, right? This is really, really important. So first we have the pre-Asian, then we have the Asian. Right? Pre-Asian, there's some sort of volume in the when the Asian opens, there's also some sort of volume, but these volume times, they're not very lasting times. They may sometimes guys say that, hey, you only get around maybe like one move in Asian session or maybe 2 moves, but not more than 2 moves, and then you move into your pre-London session. Pre-London also has a lot of volume, provided that, okay, Asian session is closing and the London session is starting at that point. So you kind of look at that, okay, if I haven't taken a trade in the Asian session, I might want to take a trade in the London session right over here. Let me bring this thing up over here. All right, perfect. There I go, right? So basically, when you're looking at the pre-London as well, now you're like, okay, if there's no volume in pre-London session, maybe there's going to be volume in London Open, right? So next we have the London Open, right? Because most of the times what happens is let's say if you're trading the pre-London and you're waiting for price to move and price is not moving and price is just ranging, you try to take buys, you try to anticipate a move and nothing's happening, you're just like, man, price isn't moving at all. So you need to look at the time. right? When you look at the time, you'll be like, okay, like, you know what? It's pre-London right now. There's going to be London session soon. So might want to wait for the London session, right? Because then there's going to be volume in the market. When there's volume in the market, you're able to take a trade. And then sometimes there's no volume in London session. So now you have to wait for New York, right? Now, sometimes when I wake up at like 6 a.m. Eastern, right? I wake up at 6 a.m. Eastern and I want to take a trade during pre-New York, moving into the New York Open. And sometimes, like in pre-New York, price is just ranging, and price is ranging in pre-New York. I have to tell myself that, okay, if price is ranging in pre-New York, oh, by the way, we're going to also talk about how to identify range too, right? So that's also what we're going to talk about. So when price is ranging in pre-New York, I automatically tell myself, okay, Raja, you know what? If price is ranging at this time, maybe the next volume is going to come at New York Open, which is going to be your 8 a.m. Eastern. And it makes perfect sense, because in the market, volume is not going to be all the time. You're not going to catch good big trades all the time. Some days, on Monday, maybe you have ranging in pre-New York, right? But on Tuesday, you might have trends in this area over here, right? After New York Open, we have London Close, right? London Close also has a lot of volume, right? So basically sometimes, with NYC Open, which is going to be New York Open 8 a.m. Eastern and NYC Open at 9:30. Actually, we're going to talk about this now. So let's just talk about the times, right? Someone may ask, oh, what time is your pre-Asian? This is the time when I have seen price move in pre-Asian around 6:30 p.m. Eastern to like 8 p.m. Eastern. 8 p.m. Eastern is your Asian Open. So you have to keep these times in mind, right? Whenever I'm trying to trade the Asian session, whenever you've seen me post results in Asian or like some analysis in the Asian, most of the trades are taken between this time. 6:30 and 8 p.m. Eastern, most of the trades, because that's what I've seen. There's some sort of volume. Now, maybe on Monday, Tuesday, Wednesday, you get volume at this time. Then maybe Thursday and Friday, you get no volume at this time. And that's just a part of the market. It's just like sales. So when you go to the Asian session time, this is the Asian Open time. I've seen volume in this time in the Asian Open. Now, 8 p.m. Eastern is obviously Asian Open, so there's going to be some sort of volume. And then, China Open, Chinese markets open at like 9 p.m. Eastern, 9:30 p.m. Eastern, not really sure. But like this is a time where I've seen some sort of volume here. If price has ranged in this time, I've seen price move in this time. Right? So I know for a fact that, okay, if price is ranging at this time, the next time there's going to be volume is going to be at this time in the market, right? Next we have pre-London. Pre-London is the time right before London Open, right? Because when you're looking at the market opens and stuff like that, what's basically happening from a fundamental perspective is that when people go to the banks, they go to institutions, they go to hedge fund offices, wherever they go to trade and like analyze the market orders. What's happening is now when you have pre-London, when people are coming into work early, they're processing the orders coming in from the Asian session. They're processing those orders. They're looking to see what actually happened in the Asian session and how are we going to react in pre-London. That's why there's a lot of volume in pre-London, because at this time they're also getting ready for the London Open as well. And then you have London Open, which is from 3 a.m. till 4:30 a.m. Eastern. This is a very, very high volatile time. It's so volatile that I have not won a trade in London session. I've tried London session maybe like a lot of times, and well, I have won trades, but mostly I've lost in London. Like I'm guilty to that. Most of the times I've lost in London because of two underlying factors. It's at 3 a.m. Eastern, so I have to wake up at 2:30 a.m. Eastern. I used to do this. I used to wake up at 2:30 a.m. Eastern and try to trade 3 a.m. with half eye closed, and I had no clue what was happening. And price was moving way too fast for my half sleepy mind. So that didn't really sit well with me at all. So what would happen was I would trade the pre-Asian, I would look at Asian session, I'd look at pre-London, I'd look at London session, I'd look at pre-New York. This is the time when pre-New York starts, 6 a.m. till 8 a.m., right? And This cycle is a very devastating cycle. If someone here who's new and you think that you can trade all these times, you have to understand all these times are there for you to come to the markets and to really master one of these times, right? After pre-New York, you have the New York Open, right? New York Open is at 8 a.m. Eastern. There's some sort of volume in 8 a.m. Eastern. There should have been another time here, 9:30 a.m. Eastern. I'm not sure what Rakil did, but he kind of messed that up over here. 9:30 a.m. Eastern. This is the NYC Open, right? So you got 9:30 a.m. Eastern. You got NYC Open. So basically, you have volume at 8 a.m. Eastern. Now, when we're trading the New York session, we've seen sometimes New York Open kind of like consolidates. Excuse me. Like it wants to move up, but most of the time it just consolidates, and whenever it consolidates, if you've been coming to the streams, you must have seen that, okay, just after we end the stream, there's always a move, right? And the reason why there's always a move is because now we're moving into NYC Open, right? So if you have no volume in pre-New York, if you have no volume in 8 a.m. Eastern, when's the next volume going to be? 9:30 a.m. Eastern. Right? So when you have volume at 9:30 a.m. Eastern, you're like, okay, perfect. We had 2 times when there was no volume. Now it's 9:30 a.m. Eastern. There has to be volume here. And whenever volume is about to come into the market, by looking at the candles, you're going to be able to identify that, okay, you know what? I've seen this before, or this is the first time I've seen this. This is a sign there's going to be volume in the market now. And we're going to talk about this later on here as well. Right? Next, we have your London close. London close is at 11 a.m. Eastern, so you start to see some sort of volume at like 10:30 a.m. till like 11:30. There's a lot of volume in this at this time. This is also now when you're looking at the times between 6 a.m. and 11:30 a.m. These are extremely high volume times because this is the London and New York overlap. Now I'm not putting these times on so that someone can have this bright idea that, hey, I'm going to trade all these sessions. No, you can't do that. You can't do that. You have to really, really master just one session. When we first started, I used to focus on the pre-Asian, pre-London, pre-New York, New York, and the London close. This was a bad cycle because what was happening was I would make profits in pre-Asian, I would lose those profits in London session, and then I would play catch up in New York session, right? And I would always win in New York session. So I looked at it, I'm like, okay, you know what? If I'm only losing in London session, maybe it makes sense to just stop trading London session, right? If you have 3 positives and you have 1 negative, and that 1 negative is affecting one of the 3 positives, and if you remove the negative, man, you got whole 3 positives. So that's what I did. I removed the London session. My profitability went up a little bit because now I was only focused on the Asian and New York. Now then for a little while I stopped trading the Asian session as well, and I only started to focus on New York session. Now what happened was my trading time decreased, right? But my concentration increased because I knew I only had this time to trade and I had to be focused at this time. Most time what guys do is they will trade the, let's say, New York, and then if they lose, they'll say, oh, you know what? No, it's okay. We got the Asian too. We're going to go get the Asian session. You try to act all like gangster and yeah, I'm going to get that Asian. But no, it doesn't happen. If you don't get the Asian, you're like, okay, you know what? We got the London session. We're going to get it in London session. And then you fall into this cycle of like losses and like, over trading and over leveraging. Man, yeah. So whoever's coming to this webinar right now, I'm going to assume that you already know what over trading is and over leveraging is, because without that, this webinar is pointless. All right. Defining an uptrend, right? How do we